Who would have heard about Michael Burry? The man has got it all. An investor who invests crazily during a market downturn is the inspiration for the widely known movie The Big Short. Lately, he has been betting his money all in on a global crisis. What's the reason behind such an aggressive investment strategy? If you want to find out more, tag along with us till the end. Welcome to yet another exciting video, pals. Before we begin, don't forget to subscribe to the channel and turn on the post notification. Without further ado, let's begin. Are you a Batman fan? That question may sound a bit out of the topic. If yes, you would know Christian Bale. So, Christian Bale acted as a hedge fund manager in the movie, The Big Short. Do you know who that is in real life? It's none other than Michael Burry. As far as an investor is concerned, what's the pressing matter at the moment is that Michael went all in during the financial crisis. What kind of investment strategy is this? Is it even reliable? Well, Burry isn't like just any other investor. He has invested in the dot-com bubble and 2008 recession and generated great profit. Isn't it impressive? And that's exactly why every investor out there is keeping a keen watch on his every move. He is more like a trendsetter. At this moment, when a global economic downfall is indicated, no one would go to such lengths and invest. However, he thinks he can benefit from this situation and can make billions out of it. It's intriguing that he clearly sees pockets of opportunity in a situation like now. Michael Burry has an impressive portfolio which was established with great precision after nitpicking. He holds a total of 11 stocks worth $165 million. That's not it. The investor also owns the option contracts worth $3 million. He also earned much fame due to his role as a hedge fund manager in Scion Asset Management. What's special about this hedge fund is that it has to reveal its assets every quarter through the 13F filing. As per the law, any investor who holds around $100 million should file for 13F filing. Michael holds around $300 million, so he should complete the 13F filing. If you look at his first quarter report for the year 2022, you can see that he has invested in a wide range of new investments. Some strategic moves with options were also taken in. This is a major shift from what happened with his previous quarterly report. In the previous quarter, he was busy selling most of his stock portfolio and even named it the mother of all crashes. In a tweet he expressed, "These earnings reports and by Joe, the whole season have a last hurrah feel." Although he isn't exactly bullish about the current market, we can't overlook the fact that he is someone who shorted the U.S. housing market and won. As mentioned earlier, he sees pockets of opportunities. So if you take a look at his 13 flings, we can see how he went all in with all the 11 stocks. According to him, inflation will continue to deepen its roots and loops, and the prices will spiral upwards ultimately. Burry thinks those 11 stocks would overcome inflation and will thrive in this adverse situation. When inflation kicks in, it affects the profit generated by a company. How does that happen? So, when inflation occurs, the input cost is affected. This includes labor costs, requirements, and equipment. So when the price of materials and related factors increase, the input costs also increase. When input cost increases, the profit decreases. Let's take the example of airline companies to get a better grasp of this situation. Two issues that concern the airline company are high wages and fuel rates. So these companies are forced to increase ticket prices to accommodate such an increase in expense. Chances are most consumers wouldn't want to buy an overvalued ticket. So consumer activity is directly influenced by the increased prices. This makes the condition worse for airline companies. They face a crisis, and some employees are even laid off to stabilize at times. Now, if we are talking about Michael Burry's portfolio, he has carefully bought stocks in all the sectors. It includes travel, tech, healthcare, and value. So he is going to benefit massively from increasing prices. Maybe oil price or ticket price. Michael can take a nap and show maybe. For instance, Booking Holding is an online booking company. As the price of tickets goes up, the profit of the company also increases. Likewise, Oindiv owns Encana, which extracts natural gas. So if the gas prices increase, if the same pattern is followed as we mentioned earlier, then Oindiv is going to get benefited. as we know tech stocks literally require little to no input costs. He invested in tech stocks like Google, Discover, Global Payments, and Meta Platforms. These are entirely working on the internet. In the healthcare sector, he invested in stocks including Bristol Myers and Cigna. These stocks hold strong pricing power, so they can increase the price without experiencing low consumer activity. The value stocks he invested in are Sportsman's Warehouse, Next are Media Group and Stellaris. He also holds put options in the tech stock Apple. A common pattern with these stocks was observed. It goes without saying that these stocks must have something worth it, which made Michael Burry. Warren Buffett is a real value investor who is considered a father figure in the investor sector. And he says strong pricing power is a significant factor when choosing a stock to invest in. Especially during times of inflation, it has a great role. If a company holds such power, it ensures that the company will continue to produce profit as inflation continues. The stocks that Burry invested in shares have high profit margins, low valuations, strong pricing power, great competitive spirit, and huge cash positions. Yes, you heard it right. He has a good eye for discerning the best and potential ones. As we mentioned earlier, Burry has put options on Apple stock. What are put options? Put options give the investor the right to sell shares of a company at a specified price within a time limit. Put options increase in value as the stock falls. For instance, let's consider that Apple has a strike price of $2,000. Let's also assume that this right to sell the stock ends by August 25, 2023. Accordingly, the holder can sell 100 shares for $2,000 by 2023. As far as Burry is concerned, he holds 206,000 Apple shares under the put option. However, the expiration date for this right to end isn't revealed yet. In the current situation, let's say that the contract price for Apple shares is $15. It means he holds $3 million worth of put shares. Given that Apple's input costs are high, it looks like a bet Burry would sign up for. The internal parts for Apple products are expensive, making it the right ground for him to bet on. According to his filings report, Burry manages public holdings worth $168 million. An extra $123 million was also in this estimate. Where did he invest it? Chances are he is utilizing it to purchase cryptocurrencies and stocks, or must have even invested in the real estate sector, or might have as well bet against bonds. In the case of all these investment strategies, via SEC 13F filings, one doesn't have to reveal the details to the public about where they have invested. Given that Burry isn't someone who would leave the money as it is to lose value over time due to inflation, we can rule out the chance that his money is ideally sitting safely somewhere. Out of the chances we talked about just now, it's less likely that he is investing in the Forex exchange as he doesn't think the dollar will get stronger in the coming days. And if we consider buying farmland or commodities, likely he would just pass. Why? Because in the currency arena, when the government thinks any individual or group is holding a potential risk by holding such commodities or land, it's not going to play well during inflation. The next logical option would be purchasing the stocks. Burry thinks that stocks will fall dramatically in a short time, so chances are he might have given it a try. Short traders would sell a stock at a lower price and would buy it when it dips. It exactly looks like something Burry would do. Whatever the case, one thing we can be sure about is that this man knows how to play it better, and he is relying on this entire global economic condition to generate great profits. Since he is known for investing during crucial times to earn massive profits, it's no surprise that he is up for the game. The result of this game can only be known in the coming days. Please note that nothing mentioned in this video should be seen as financial advice. With that, we have come to the end of the video. Goodbye.